Good morning, everyone here at the Investing Stuff You Should Know podcast. We have another exciting guest with us today, Kris Morin. He is the founder or the principal of, not the founder, but the principal of one of the principals of Three Peaks Capital. Kris has quite a storied background in corporate. He's been in real estate for a while. I know he recently launched a fund. So thanks, Kris, for being with us this morning, for sharing the knowledge and the insights that only you can bring to our audience.
Yeah, man. Thanks for having me. I'm really excited to be here.
Beautiful, man. Beautiful. So you're based in Connecticut, or at least you live in Connecticut with your family there, Kris. Did you grow up there?
Yeah. Born and raised in a small farm town in Connecticut that even most people in Connecticut don't know about. Stafford Springs. Yeah, it's tucked up there in the northeastern part of the state, pretty close to Yukon, where I ended up going to college. But born and raised here, moved around the state a little bit over the course of the years, but never really got out of it, aside from when I started traveling for my corporate career, which was kind of a big culture shock for me. And we could certainly get into that.
Yeah, let's talk about that a bit. Yes, the people here want to hear about real estate and funds and capital raising and all those kinds of things here. But obviously we need to seed and give credibility and background to who we're talking to here. So yes, you stepped into the corporate world. Why did that attract you, and what kind of value did you find there? How did that resonate with you for at least a while there? As we
Yeah,
know.
well, so maybe I'll go back a little bit beforehand. So
Yeah.
I was actually coming out of school, just for folks who think, oh, you have to have like a business degree or something related to real estate. So I have a biochemistry degree, a master's in education. I was actually a high school science teacher, and I was just like, I was tired of being a broke, and I had this entrepreneurial bug within me. I knew that wasn't really what I wanted to do, not at least in that point in my life, but I was kind of just like most folks, like just going with it, right? Following the master plan of life, get a college degree, start a family, get a job, blah, blah, blah. But that just was not sitting well with me in my stomach, right? And so I spent a lot of time reading up, like, what are the lucrative careers out there? And long story short, I got onto this idea that, hey, I can get in with one of these big consulting firms and I can learn all this stuff about business. They send you off to business school. You get the best education, money can buy, based on what I'm reading, right? They hire all these Ivy Leaguers and whatnot. And so that's what I set out to do. And I took some books from my brother, who was a business major in college, started reading them all in my free time, networking like crazy. And I'll spare you the details, but I did get myself in with one of those big consulting firms. And that really was the start of a lot of great things for me over the last, 12 or 13 years. And, the lure of it for me was, one, I was looking for a lucrative career. Two, who isn't when you're in your early 20s? All you're thinking about
Yes.
is money.
Yeah.
That's like the fastest. Yeah.
And ways to spend that, if I had this, I could do this. Right?
Exactly. And I knew for me it was a part of a plan, and that's always, I think, really important. Like if you're going to take a job or do anything in life, it has to be a part of a greater plan. And my plan was really to learn, about solving complex business problems, learning about operations and supply chains and all the things that I didn't learn because I never went to business school, and use that knowledge to start my own company or one day invest in real estate. And that's exactly what I did. So fast forward, I spent the better part of, a 10-year career growing up in the consulting world, working on some of the toughest projects for some of the biggest companies in the world.
Let's pause on that, Kris. It's
Yeah.
I know it's we want to sometimes we just want to gloss over it. I think there's a lot of value in there. So let's
Yeah.
talk about it, like talk about two projects, two of your favorite projects. Like these things do get complicated, and the people that are in that space, they really appreciate, like, yeah, there was no easy answers. So to give us a couple examples there of the kind of complex, just of curiosity from the curious, and also for myself, what'd you do?
Yeah. So I'm trying to remember where I have NDA signed and where I don't,
No.
but it's a lot of I mean, this is the cool nature of like the consulting world. And if there's anybody listening, they kind of know, like, one minute you could be working on a team that's helping a company figure out how they price an iPhone in the marketplace, to you're doing, or I'm working for a company who's replacing all of their technology across, 13 countries globally, and they have to figure out how to do that, and how to, shift their business operations to accommodate new technology systems. Or Yale University brought me in, here in Connecticut, because they have a lot of researchers who obviously take grant money and fund money to do, complex research projects. But, if I would kind of liken it to the requirements that we're placed under with the SEC. We need a very discrete paper trail or clear paper trail, right? Of who we talk to, when we talk to them, how we
Yes.
utilize funds. Well,
Yeah.
they need the same kind of paper trail, but they didn't have it. And at one point they basically landed themselves into a massive lawsuit. And so they had to set up, this essentially this funding and grants department and figure out how to disseminate funds and do all the tracking across the
What
university. And
was
so I
the
was working on that.
what was the lawsuit about? Like what was
Yeah, well,
the litigation?
without really going too much into the details, I believe it
Like
really came.
somebody got mad about something and they
Yeah,
sued Yale. So like
exactly.
what
It,
was
it
that
came
crux?
it
What was the
came
crux of
down
that?
to not it came down to not having the right traceability of funds,
Oh
basically
wow.
knowing how much money was taken, where was used, how was it used, what was the outcome, what was the excess or surplus capital, who was it returned to, like all that stuff, like that paper trail just didn't exist. And so, I mean, just to give you a flavor of like the very vast nature of like the different types of projects I got to work on, but like you learn a lot about operations and finance and manufacturing, you name it. I've kind of, I always used to say at the time, over 10 years, I worked in as many industries and it was a lot of fun. I kind of became a jack of all trades, a master of none, but like
Yes.
it was a good time and I learned a lot of very valuable lessons. Built a lot of great confidence. I mean, you're oftentimes you're kind of faking it till you're making it in front of some of the largest, and most prominent executive teams in the world. And, that helps when you're now sitting in real estate conferences and you're trying to have the confidence to pitch yourself or to raise money. I think that went a long way. Putting myself in those uncomfortable positions definitely played well in real estate when I decided it was time to go into that space.
One item that we sometimes we forget, Chris, at least I have in the past, and maybe some past investors that I've spoken to, real estate is seen as kind of this like exotic thing, like stocks and something like that. Although we both know it's simply a business, and it can be a poorly run business or a well-run business. And when you think about it like that, it's like, oh, it's like another. It could be like you could be doing lawn care, or wealth management company, or we happen to be doing real estate, and we're kind of, how is this business of real estate being run? So it kind of removes the aura around it. If people are intimidated, or if they don't really know about it, it's like, hey, this is a business. And I think the point of that, or mentioning that, is the fact that you had all this business experience and diversified all these different verticals. And that's really a real value, that when you go to approach, and when you stepped into the real estate space more fully, or fully for the, initially, you saw a lot of, good ways, bad ways, and good ways of doing a lot of these different things. So I think that's really valuable perspective.
Yeah, for sure. I mean, you go at it with a whole different perspective right out of the gate on, what are your core processes? How are you going to establish workflows? Enable that with the right technology. What are the roles and the skills and the talent that you need to slide into those spaces, right? You just start thinking more like a business because you've had exposure to all those different types of problems in a corporate environment. And so right away, the things that you should be focusing on to build a good, strong foundation for your own business. And so I was able to do that. And that enabled me, to grow a business operation where, I was getting on a plane on Monday mornings, flying to some other corner of the United States and working for
Yeah.
4 days, long, long hours. But back here in Connecticut, I had a full-fledged operation going on. My marketing was still going out the door. The phone calls were still getting answered, talking to motivated sellers, going out and viewing properties, making offers. I had teams of people that were doing all of that. And sure, I had to follow up with them maybe at night from a hotel room, but for the most part, the business was running itself because I created those operations, enabled it, and I'd come home on the weekends and sign on contracts or check up on rehab projects. And, it even got to a point where, I started thinking to myself, well, heck, I'm flying to Detroit every week for the next 6 months. Why wouldn't I just start building a team, raising money and flipping houses in Detroit? And,
Oh, yeah.
at one point I'm in Norfolk, I'm in Richmond, Virginia. I'm in Norfolk. I'm in Newport News. I'm in all these different places. And I started to just do the same thing because now I had this operation that I could just expand it anywhere I wanted to. And so that served me well.
One thing, maybe I missed it, Chris, or maybe we touch on it very lightly there.
Yeah.
So we were in the corporate world, we're in the consulting world, and then we didn't catch quite carefully yet that you started this point where you started real estate investing. So that
Yes.
give us a bridge there. So like, I mean,
Yeah.
obviously a professional, in the financial space, the consulting is like, it's a very natural thing to think and know about, but give it to us for you. Like all of a sudden, when is that first deal? How did you know? And when did you realize, you had this full-time job, and then also you could do some real estate. So give us that bridge. We missed
Yeah.
that.
Good. Good catch. It's an important detail. So it was right around 2009. So we're in the depths of the financial crisis, right? So it's
Yes,
in a
yes.
lot of ways the worst time for the economy, absolute best time to jump in real estate. I made the decision, this is it, I'm going in. And now, mind you, I'd like to say I was smart enough, I recognized the opportunity, but I wasn't. It was just pure coincidence. I was like, I'm going in, right? But it happened to be a great time. Like most folks, I ponied up. So I hadn't I think I joined the corporate world around 2007. So I was doing well financially, but I was still paying down a lot of debt. So I wasn't sitting on loads of cash. And so, at the time for a 20 something, 26-year-old to sit there and say, oh, I'm going to pay $15,000 for an education program, that's a steep investment. But
Yeah,
I
yeah,
did
yeah.
I did that. So that's what I did. I got involved with one of the big programs that are out there to build that foundational knowledge. And to be honest with you, I wasn't the kind of person that was like, well, I'm going to sit through like 6 months worth of courses and try to figure it all out. I think I took like 2 courses to just know enough to be dangerous, or to figure out enough to like go buy a list of motivated sellers and start sending out mailers. And within 60 days, I was fielding phone calls, just kind of like tripping over myself, still barely even knew the questions I was supposed to ask. But I was also out there like raising money. And
There is no better way to learn, man, than that
yeah.
doing that. Like just get enough knowledge to take that next step, like
Oh,
just to
yeah.
guide that next footprint, that next step in some direction. Is it north, east, west, south, so
Yeah.
just get enough knowledge and take that. And yet it's hard, it's super uncomfortable, but you learn so much faster versus like, oh, I'm gonna be
Yes.
all careful and it's gonna be the perfect time and I'm gonna feel fully prepared. Like 6 months later, a year later, it's not that. It's still not
Yeah.
that. You're still uncertain. You still have all these questions. You got to go back, revisit all the things you learned. Please continue though.
Yes,
Yeah.
you just said it. So let me just repeat that in case people just like it went in one ear and out the other. There's no better teacher than action, and certainly nothing's going to yield results behind a computer, right? You need to take action. And in even I've done, dozens, if not hundreds of transactions of different types at this point in my career, but I still have questions sometimes on very basic deals, either because, they come up because you're not doing that kind of deal every day, or, things change. And so I always tell people the same deal is not going to be the same 2 years from now. And so you're never really going to have it all figured out. So you might as well get out there, roll up your sleeves and just start doing it. And so, and the other thing I would say is like my recipe for success was always, you know, obviously you got to educate yourself, but surround yourself with people who know the things you don't, who can look over your shoulder and say, don't do that. You're going to step on a landmine. And like, you can't possibly go wrong. You just can't. You're going to make mistakes in life, no matter how many mentors you have. It just, the difference is how many zeros are going to be attached to it, right? Is it going to be a
Yeah.
small mistake or a really big one? And that's sort of the analogy I always tell people, but you got to get out there and just take some action, and you'll be so glad you did every single time. I have a really unique story for you. This is kind of a tangent,
Nice.
and it's just like a benefit to taking action. I also tell people like other things happen that just weren't a part of your plan, because like you meet lots of cool people, like you and I meet each other, right? And people, lots of different ideas who can help you in different ways. I ended up meeting a wealthy investor out of Boston who shared with me this idea of wanting to sell exotic cars. And we can go into the story if you want, but I'll tell you this. I never planned on buying and selling exotic cars, but within 30 days of that conversation, I had a Ferrari wholesale dealership and we were buying and selling Ferraris.
Oh,
And
seriously?
yeah, yeah. And right, but that all came from just taking action and meeting people. Like it just creates new opportunities. So like you're never gonna have it all figured out. Just get out there and do it.
Oh man, that's a great story. I love that.
Yeah.
An older gentleman, we were having dinner, my wife and I and his wife and him were having dinner about a month ago, and he was in IC chip design, and he knew one of the founders of NVIDIA, and he had the founder, one of his founders had started two other companies and completely failed. And maybe people know who NVIDIA is, maybe not, but it's one of the large, chip, design companies in the world, in the US, And the point is, it's like Ford or GM or Chrysler in the auto world. It's like one of the big ones, And but yeah, he completely failed twice, and then his third stand up was NVIDIA. So the point is, like, it's, you could hang your head in shame. You could feel embarrassed. You probably did. People probably mock him. His family probably said, "Don't do this again," and you keep trying. So the third time he finally developed, he finally got one of these companies. And that story, that narrative is not that unique. Many, many founders and different and people like that have that similar,
Yeah. Yep.
storyline there. So
It's a great point. And listen, any real estate investor who tells you they've never lost money either is lying or they haven't been in the business long enough, I always say. And so, it's just so true. And but again, it doesn't have to mean that you have to fail, but you are going to have some mistakes. If you can just get over that hurdle in your head now, you'll be all the better for it. A decade from now, your wealth will obviously be in a much different place. And, I'll share openly with folks. There was a time where I was sitting at a bankruptcy table. I was so, fast forward.
what year was that approximately,
Yeah,
Chris?
that was
Approximately.
about 2010. So like a year after I jumped in, right?
Yeah, yeah.
Things were
That's a
cranking.
that's a hard hit, man. That's a hard hit. I mean,
Yeah. And I
you
was,
got your wind knocked out and you're laying in your face in the sand. That's what
yeah,
that's like.
yep. Because I was, and it's not because the market crashed. It had already crashed. It was because I was young, maybe a little too naive and too trusting. And I'll just say I had lots of projects going on, and maybe not enough controls in place. And, you start trusting that contractors are going to do their job, manage funds appropriately without having the right sort of checks and balances in place. I'll just say I had, and I take full accountability for this, but I had some bad actors do some bad things and I was, liable for it. And one thing led to another. And basically I had a couple private lenders with some commercial loans call some notes due,
Yeah.
and I wound up in court and I had a big fat judgment against, so I lost everything. I lost my rental properties at the time, the projects that were in flight, and shit, my girlfriend at the time even broke up with me and kicked me out because she basically thought I was so she was like this materialistic attorney girl, and she was like, I pretty
Yeah.
much was a loser in her eyes, so she kicked me out. And I literally sat with an attorney. We were deciding whether or not to file bankruptcy, and we'd gone all the way through with it. And I met him on like a Sunday because it was the last possible day I could file. And I said, you know what, I'm not going to do this. There's a lot of people that are counting on me to pay them back. And
Wow.
so I didn't file. I took the judgment against me, which ended up being $120,000 after they seized all my assets. And, I took 6 months to cry it off. Oh, and here on top of all that, I lost my job at the time because
Oh
they
my
found
God, man.
out.
Was it tied to it?
Sort of, yeah, they didn't like the attention I was getting. And so, yes,
Wow.
so I lost everything, lost my job, my girlfriend kicked me out. And so I basically was left with nothing. And obviously I came back, but I took 6 months of sort of mourning and questioning myself, like, what was I
Yes,
thinking?
sir.
Why
Yeah.
did I ever think I could do that? But I came back with a vengeance because really the gold is in the lessons, right? And I was all the better for it the second time. And I'll say this at this point, though, like I had a couple of small multis, single family rentals, but like I was really only flipping houses. And it wasn't until I sort of surged back, it came back for a couple more years. But, there was this pivotal point around 2015. So, a couple years later, my career is growing in consulting. So my roles and my responsibilities are growing. I'm taking on bigger projects, overseeing bigger teams, working longer hours, and now we're well past the recession, and the market has shifted. There's it's not like you can throw a rock and hit a foreclosure anymore. It's now more of a seller's market than a buyer's market. And so smaller inventory, everybody, so take that point, then everybody came off the sidelines over that 5-year period because you have all these gurus saying, oh, I'll teach you how to flip houses, right? They see all these people making money, and so now you've got
Yeah.
all these people who don't know what they're doing, jumping in emotionally, creating these bidding wars. So you have to pay more than you should. So profit margins are going down, inventory is going down. The business is stressing me the hell out. I remember getting off a phone call with a contractor and I was in a hotel. I think it was in Richmond at the time, thinking to myself, that's it. I don't want to do this anymore. And, this isn't why I got into real estate. This isn't passive income. Like, I don't want to do this. I literally just burned out. So I let the business run itself out. And then, I actually took almost a year off before I said, all right, I got to get back
Oh,
in this thing. And then
yeah.
I started buying multifamily at that point. And man, I don't know why it took me so long for the light bulb to go off, because obviously that's when my wealth really started to skyrocket.
That's amazing, man. Wow, that's amazing. Uh, there's a lot of threads we could pull on there, but one I want to touch on was the coaching aspect. You have a coaching business, I believe, and I think probably still have some students that you coach now. Is that true?
So yeah, I actually ended up sort of closing the curtain on that about a year ago because
Okay.
I was just getting so busy with the business and so busy with the students that I wanted to make sure I could give them the time and attention they really needed. So I sort of pushed the stop button for a little while on that, but that does exist. So I created a program that's more focused on helping newbies get into small multifamily, raise income, find properties, analyze them, the basics, find the deal, find the money, and get it done. And it was called Get Rental Rich. It's kind of a play on words. Get rich, get rental rich. That is out there. I do intend to dust that thing off maybe in the next year or so, but that's on pause for now.
Oh, for sure, man. And just setting aside like the business or the program itself here, what what is it? Why do you often why often do people that are successful in the corporate world and also in the real estate space feel called to coaching? And what are some attributes that you've seen that contribute to success? And what makes a good coach?
I think what's really important is being able to listen very intently about, um, you know, getting under somebody's goals, but also listening and looking for like where are their weaknesses and their strengths. I've often, I think back to the programs that I purchased, they kind of have a blueprint and you have to follow the blueprint. And steps 1 and 2 might not fit for you. Maybe it's not a strength of yours, or maybe like you're just not comfortable and you just downright don't want to do it, or maybe it doesn't work in your market. And I think a good coach, a good consultant will take all of those things into consideration and customize that blueprint. And so you have a program in mind, but all things don't work for all people and they don't work in all markets. And so I think you have got to be able to adjust on the fly and be smart enough to know, even when it comes down to certain strategies, right? You buying a specific asset type might not make sense in certain markets. And so you've got to have the wherewithal to coach them down a different path. Or if you don't have the expertise that's required, you need to own up and say that. And so I think that's really important for coaches.
Did you? I can't. I love the way the methodology and the very logical way you've laid that out. Do you feel that some of that clarity of thought and ability to morph came from some of the corporate work that you did in all these different projects? I can't imagine that didn't have some influence there.
Yeah, yeah, I really do, right? Because
So, like some of the people you looked up to in the corporate world. What were some of those? Some of your mentors or guides or coaches in the corporate world? What qualities did you see in them that helped you develop this nimbleness and this facility to adapt to the environment? So to be successful,
yeah,
we often just make up stuff and like, oh, we're gonna do this today and do that tomorrow and fly around and just make up stuff. But you had to be you had success. So there's something that's yes, you had to be adaptable. Also, you need to be successful in your adaptation.
yeah, I think that's a really good question. I think it was more of a reflection of like when did I succeed most and why did I succeed most? And maybe it was because somebody took the time to say, well, you're not so good at that. Maybe we can get somebody else to help with that instead of forcing it to be done, right? It's like because it's
Oh,
not going to yield the outcome that either one of us wants.
yeah.
Let's figure out a way to do it, right. And so I think maybe some of those, because I'm not perfect, right? I wasn't the perfect worker. And so maybe it was some of those interactions where, like I said, I was able to reflect like how and when did I succeed and fail and what was done to enable me so that I could be at my best. And I think I was kind of taking some of those pieces and then trying to relay that. But yeah,
Yeah,
that's
I
a really
love.
good question.
Let's pause on the man. So let's talk about teens for a second here. So about a little year and a half ago, yeah, not a year and a half ago, I was like, I'm gonna like call the brokers and talk to the bankers and tour the properties and underwrite. And it's exhausting and a lot of
Yeah.
work, and we didn't have anything. And then I partnered up with somebody, and initially, but the first month, I had this bad attitude, like I don't want to do this, I have to share all these kinds of things. Like I know I can do this myself. And like a month later, after we partnered, I was like, oh my God, thank God I have this other person helping me. Like this is so fundamental. Like I can't imagine doing this any other way. So finding people, finding key people to help to do the things that they're good at. That's a key piece, whether you're a beginning investor or maybe perhaps a more sophisticated investor or in a business of some kind. Could you talk to that? I think we kind of brushed on that idea a bit there, but
Absolutely.
like I think that's
So
so key.
yeah, it's so critical. You said it, like we only have so much time, and a lot of us get into this because we're seeking some kind of freedom or right. Certainly, income is a big part of it, but if you're doing it all, there's really no freedom at all, right? Like you're just a worker again for your own business, and so you know
It's literally miserable. It's like
it
miserable
does it
unless you're a
does
genius. I mean, like I'm not a genius, so like
yeah
I'm not that
it
smart. I'm not that fast.
Yes, miserable is the right word because and they always say, oh, if you're doing what you love, then it's never, you're never working. Well, that's just not true. You can absolutely burn out doing anything. And so you need a team. And I always say, like, I can learn how to do everything, and I do know how to do everything. But I can't do it as well as somebody else who's like, that's just their strength and that's what they
Yeah.
love to
But how
do.
did
And
you, so this is actually a key thing here. So within your coaching, and I know you know the answer here, but I want you to elaborate for us.
yeah.
How do you know to tell someone or to suggest to someone, just like they had someone else, your mentors, your coaches, whatever boss has told you, like, oh, you need to get, person X or Y or Z to help you with this or come alongside. How do you know when a newbie investor or some other investor needs additional help? What is that inflection point? How do you know, like, hey, you need some help here, or you need some additional resources?
Yeah, that's it. Because, I always make people I really dig into their lives, like,
Yeah,
to understand, your job and the requirements and the commitments, because we don't want you to falter there until you're at a point where you can quit. Like, you have to continue to perform. And,
yeah,
you talk about your commitments to your family and you talk about your hobbies, right? And you start outlining like, hey, listen, you're really busy. Do you really think you have the time to make this many seller phone calls a day or talk to this many brokers, visit this many properties, right? Like, you just lay it all out. And
yeah,
there's a real minimum time commitment, and they're like, no, I can't do any of that. And I think you really got to start to dig into what are their strengths, what would they actually enjoy doing,
yeah,
and say, okay, everything else is a gap for you. And if we know the strategy that we need to align to, like if it's buying multifamily and you don't have your own cash, well, you need to find properties, you need to be raising capital, you need to be analyzing deals, and you need some asset management. It's like those are key roles that now we need to go and fill. And so you're able to kind of coach them through that and how they can go and maybe find some of those folks at local meetups, or if they can do it even on virtual meetups. I mean, my team is scattered all over the country. I'm not going to an office every day and working elbow to
yeah.
elbow with right. But we're very effective. We just closed on 58 units 2 days ago.
I saw
Um,
that. I saw that. You saw your post on LinkedIn. Man, it was amazing watching you guys like go down to the wire before the year. I was so excited,
yeah.
just kind of watching that from the side, happen. So that was
That
really
deal
that's
got interesting a few times. We almost lost it a few times, but that's how real estate works, right?
that's
But
amazing,
yeah,
man.
not to get away from it, but yeah, I think, just really getting honest with them about what they can commit, what their strengths are. And again, going back to our conversation, we want to make sure that doesn't happen. We want to see that, make sure and that if you have a team, you're more likely to do that. You're going to hold each other accountable and you're going to do everything effectively.
Yes, for sure.
Yeah.
Well, let's bring it into the current day. We've kind of talked about it already, Chris, and that is, your current company. And then I know that you um, started a fund, and that's something that
Yeah.
I'm doing as well, and also interested in. Let's talk about kind of like the current where you are today, where you want to go and grow, and then also what enticed you about the fund. So like three questions there.
Yeah. So today, as you mentioned, it's Three Peaks Capital. It's primarily focused on, commercial multifamily. That is our specialty, non-mixed use. I think some folks are very broad. They're a little bit of everything: mobile home parks, self-storage, et cetera. We are interested in student housing, but that is our niche. That's our expertise. We're largely focused on the Midwest right now. A lot of those markets still have a high degree of affordability, and so when you think of, without going too far down the economic road, inflation is being felt across the board for these tenants. And, you hear and see in the headlines about, rent increases going up 8, 10, 12%, in some cases year over year. That's only sustainable to a certain degree, right? Like the
Yeah.
wallet
And
only
that's in
stretches so
like the hottest markets. Like we're talking
yeah,
Phoenix and Miami and
yeah,
Austin.
exactly.
Like, yeah, just like
Exactly.
insane rent
Yeah.
increases.
But
Yeah.
even in other markets where it's still, you're seeing the national average 3 to 4% or so year over year, inflation is pinching the wallet on the groceries and gas and energy, right? All those things. And so, some of those markets where rents are exploding, like that can only be sustainable for so long. And so we like to target markets that we think are a little bit sort of at the bottom of the growth curve, not stuff, Houston, Dallas and whatnot. There's still plenty of runway for growth, but we think they're near the top of that. And so we've identified a few markets around the Midwest where affordability is still very good for those consumers. There's still a lot of room for rent growth, and it's sustainable. It's attractive, and so it's going to continue to get more population because folks are now migrating to areas with lower cost of living. Good job growth, all those indicators we look for as real estate investors, right? So there are
Yes.
markets in Indiana, just as a whole, is a very good state for that. And there's a very strong outlook for a lot of the markets in Indiana. So we have a strong presence and focus there, parts of Kentucky. And so we are focusing largely in the Midwest, because there's a lot of deals with great upside. However, I live in the Northeast, and Boston and all the submarkets around it, extremely strong, extremely high performing. You're paying a little bit more of a premium. Maybe you're getting a little bit more of a lower cash return, but huge upside. Strong underlying economy underpinned with financial services, biotechnology, all of these industries, and Fortune 50 companies even that are
Yeah.
recession resistant. So, the investments in those areas are safe and strong. And so we're continuing to keep our eye on the Northeast as well.
I like that, man. I like that. Not alternative, but like you
Yeah.
hear all of the, if you're a sponsor or an investor, obviously we hear a lot about the hottest markets and the REITs and the big institutional money just
Yeah.
automatically go down to Dallas or something like that. But however, like you said, there's like I live here in Minneapolis, Minnesota, so Midwest. Midwest, there's pockets that are really robust. It's like you said, low cost of living. There's good, there's farming and manufacturing and, maybe some financials. And like you said, but then even an area like we don't normally consider, like Boston, and the submarkets, and the first ring, second ring suburbs. Like you said, all those fundamentals are there. So if you put take off the normal lens and then put on your own lens, like, hey, there's actually perhaps some opportunities here. So I love hearing
Exactly.
those alternative perspectives.
Yep. Yep. And those markets are very good hedges. And, as far in terms of where we're going, I think, a lot of people that know me, our slogan is, 2,500 units by 2025. So that's something that's our
Oh, I
BHAG,
like
right?
that.
That we
Yeah.
put out
Yeah.
there. Yeah. It's got a good zing to it, but that's where we're at. We're chasing that. And, we've had a real good year. So Three Peaks really just started this year. I always tell people, especially investors, the company is new, but the team is not. Right? We bring a great deal of experience to the table, because they're like, "Well, you've only been around for a year." I'm like,
Yeah.
"Not
Yeah.
quite." But this particular team is new, and so we're still very early on in that journey. Like I said, we just closed 58 units. We've got another 40 in Indiana, and we've got a lot in the pipeline across Indiana and Kentucky. And I think we're targeting at least 1,000 doors next year in 2023. And I think that's the path that we're on, and we're continuing to figure out how we can be smarter to enable our team with the right technology and processes. I think a lot of people are surprised to find out I still work full time along, with all of this going on.
Yeah.
Two of our managers, so there's three of us. I'm a full-time director of business strategy for a $4 billion company in Connecticut. That comes with a great deal of responsibility, and so I continue to enjoy that. But it also continues to make me a stronger business leader on both fronts, right? Because I continue to surround myself with amazing leaders, and I continue to learn, and it's great for that regard. One of the other managing members of my company, and actually I'll outline our roles too. So
Yeah.
folks who will find me on social media, I obviously am very active. I'm kind of the face and the brand for Three Peaks, so to speak. A lot of people kind of consider me the leader, but I handle all the investor relations, and all the capital management. As you mentioned, I'm sort of the fund manager. We could talk about that. One of the other managing members is a full-time attorney in Seattle, Washington. He does all the underwriting. This guy knows underwriting as well as anyone. I mean, he is presented at Michael Blanc's events, and if he
Amazing.
attracts,
Wow.
yeah, operators with thousands of doors under management. So, our underwriter is extremely sound. And then we have a third managing member who's more of the asset management. He's a young entrepreneur right there in Indiana. He didn't go to college like most of us. While we were in college, he was growing a company through acquisition, rolling it up, and he exited for a couple $1,000,000 while I was still taking tests. So
Yeah.
he's a really intelligent and accomplished young man, and he took some of those profits and started investing in commercial real estate. And he knew he wanted to build his own team, and the three of us ended up meeting actually through Michael Blanc's events, online virtual meetups. But that's the short version of a long story. But we have a real solid team, 2,500 doors by 2025. And the fund really, the genesis of that was really
Oh,
came
now
from
so now just for the just I could put like
yeah,
a pause there, a
yeah,
bookmark.
because I'll go
Now we're
forever.
yeah now we're in another chapter. So we're wrapping it up here, folks. So the final chapter here, Chris's team you probably were syndicating, if that's true, and now you
Yes.
kind of went now we're kind of going to this little bit newer idea, newer model of using a fund. So let's start there.
Yeah. So and this, right? Syndications, you find the deal, and then you're running around like a chicken with your head cut off, trying to find the money all in that 30 or 60-day window. Sometimes you have to
Yeah.
raise millions of dollars to get it done. And that can be real stressful, even when your go-to investors aren't always there. They might have deployed all their capital for the year. I've had multiple gentlemen say, "Hey, Chris, I'm going through a divorce. My attorney says spend nothing," right? Like stuff comes up, life happens to
Yes,
these people.
yes.
So anybody listening to this, by the way, don't think that when you raise some money, you're done. You're always going to have to be raising new money because like things like that always
It's
come up.
part, it's a part of the business. It's like,
Yep.
you know, it's like if you were manufacturing something and you're like, oh, we don't need to market for the next 6 months. Like that's insane. Like all these
Yeah.
functions need to continue while, you know, the other parts of the business are going on.
That's right. So we thought, well, what if we had a fund where we're always raising money and it's kind of sitting there and it's ready to be deployed as we need it? And maybe we're a little bit naive in thinking that that's possible, but that's the path that we took. And you know, it costs the same amount of money to set up a fund as it does to file for a syndication anyway. So we thought, let's just set up a fund. If it fails, we'll at least acquire this 58 unit property through the fund, and then we can put it on the shelf and say, well, at least we tried, right? But we have the fund. We've raised several $1 million in just 3 weeks to acquire the deal. We have a lot of investors now interested in the fund, and we're going to continue to raise money into it. And so, still waiting to see, the sort of the use case play out where we're able to attract the money and it's there for us so that we can deploy it quicker. Another benefit is now we can bring other people's deals to the fund, and our investors can see those deals and invest in them. And when they do, we obviously get share for that. So it does create other pathways to generate income.
Amazing, man. So we'll probably wrap it up there. We try to keep this around half hours. It's been great. I feel like you just, just showered knowledge and wisdom and, your background and all the different things that, that you can offer. And it's really exciting to just see someone else's journey. It's also to point this out to the audience, how you mentioned, kind of hinted at, but then you said it explicitly, was how you continue to stay a full-time employee, but then also doing all these other things. So there's lots and lots of things out there that are possible. I left my job as an engineer about a year ago. I just felt like I couldn't focus and have enough time to do that. And so that now I've gone in full time in the real estate and the fund, but that's not the point. Is like there's different paths for different people, and there's different ways of doing it.
Yep.
And Kris is obviously an example of keeping that full time job, something he enjoys, something, and there's benefits to it, and also growing this amazing real estate company, and with from his own perspective and his team's perspective. So that's really, really good. What's the best way for anyone to connect with Three Pigs Capital besides probably just Googling threepigscapital.com or something like that, Chris?
Yeah.
What's a good way to connect?
Well, the funny thing is we don't have threepeakscapital.com because that URL was $10,000, but
Ah,
threepeakscap.com was
yes.
was $10. So we went with that one.
See,
But
guys, they're saving you money right now as we speak. They're thinking about you. They're not
yeah,
wasting money on frivolous things like the perfect website domain.
that's right. That's right. But no, you know what? Facebook is and LinkedIn are a great place to start. Kris Morin, that's Kris with a K. I'm very active there. It's a good way to follow me and understand all the things that are going on with me and the company and just get to know me as an individual. I'm super responsive if you want to message me because you want to ask a question or you want to share a story or you want to invest. Yeah, absolutely. Get in touch with me. I'm very responsive, but Facebook and LinkedIn, Kris Morin is the best place to start.
Wonderful. All right, everyone here at the Investing Stuff You Should Know podcast. We thank you for listening to another exciting episode. We continue to bring great guests on like Kris for your listening pleasure and your education. We would always appreciate, of course, if you give us a like, spread the word. If you like the podcast, let me know in the comments. And also, of course, we've been putting this on YouTube as well. So if you want to see Kris and I's lovely faces, you can do that too, or you can just listen if you're in your car. So until next time, we're signing off. Thank you, Kris.
Hey, my pleasure. Thanks for having me.